it's a starting gun for a lot more volatility and probably a lot. You could see these huge gap ups if and when something like that happens. I think the odds are pretty decent for something like that to happen. But if that were today, for example, we're at $80, frankly, I wouldn't be surprised to see a $15 or $20 gap up in the silver price on that kind of news. It would just shock the market, and people would scramble. More than anyone, it would be the industrial consumers, because they don't have. It's not an optional thing for them. They need this silver. They're producing all kinds of things, and so it's very difficult to substitute. There's only a third of the silver there was 5 years ago now available for investment. So when all of these participants jump in and want to have the physical silver for investment purposes, they put a big squeeze on it. And that's, I think, what happened when we went into the end of December and then ultimately to the end of January when it went to $121.
Some of them are making insane cash flow right now. The producers, obviously.
The all-in sustaining cost for an ounce of silver on average, if you include byproducts, so which are typically gold, copper, lead, or zinc, is about $20 an ounce. So at $30 silver, they were making 33% profits. At $90 silver, they're making 78% profits. So their profits are up like 2.5 times. And I think that we're going to start to see over the next few quarters, as these miners report their profits, the market is going to have to come to terms with that and realize that their prices have not yet reflected, although they've moved quite a bit over the last year. The explorers, the developers, the producers have moved significantly. But there are some charts that show that the price of silver has moved up so much and so rapidly that the price earnings ratios in these stocks have not kept up. And so although their share prices have moved up, their valuations have actually gone down. So they've gotten cheaper as their share prices have gone up, simply because profits have gone up so much faster.
For disclosure purposes, our site does not make recommendations for purchases or sale of stocks, services, or products. Nothing on our site or this podcast should be construed as an offer or solicitation to buy or sell products or securities. All investing involves risk and possible losses. This podcast is for entertainment purposes only.
Peter, it's fantastic to have you on the show. We're going right after PDAC and probably the craziest start to the year for silver so far. As all these things, because it's like warp speed, you can't even keep up with the news. And with all these things that we could talk about with silver that have changed the market and the fundamentals, are you finding after PDAC that more people are looking at silver as a safe haven or like versus like speculative, or is it more just a demand investment that you're seeing so far?
So I'm going to say almost all of the above. But I will say that you're right. There is more safe haven, I guess, interest in silver compared to what we've seen before. It's interesting because I think a lot of what has driven that is the fact that, gold's gotten expensive. So at $5,000, it's out of reach for many people. And especially if you look at some of the developing world, like I think we may have talked about this before, but it's only gotten more pronounced. Places like Turkey, Egypt, India. In Turkey and in all three of them, it's ingrained in them to own gold and silver. Gold in particular, I guess I'm going to say. Silver certainly is becoming, the alternative, it seems, because, for example, in Egypt, they give gold when there's a newborn. They give gold when there's a wedding. We know that they do that in India. They have all these traditions in Turkey as well. And now because gold's just gotten so expensive, I'm hearing of people looking to, well, the jewelers, I guess, are getting smart. And what they're doing is they're producing things out of silver, pure silver, and then they're plating them in gold. So people know that that's what they're buying. It's just that it makes it more affordable, and then you have the same look. And they're both precious metals. So interestingly enough, from that, higher gold prices are driving higher silver prices because it's driving more demand for silver. And of course, people looking at gold having run up so much to $5,000 and saying to themselves, oh, well, I need to get into this market, and thinking, well, 1 ounce of gold, $5,000. 1 ounce of silver now $80 or $90, well, that alternative is pretty attractive. I think a lot of what's driving it.
Do you want to give some commentary? I think we're around 83, $84 today for silver on uh, the wild ride that we've had this year. I'm sure people, last year when we talked in the summer, never would have believed that we were going to be here already. So
Me included, Callie. I'm willing to admit it.
do you feel like pretty comfortable with that 80, 90 range for silver short term? And then like, do you think, I mean, people are calling for 300 silver?
I'm going to say that I don't think that this consolidation phase is over. I do think we could still probably see somewhere around the low 70s still before this phase is over. But I think we've seen the worst of it. That big correction from 120 to, once to 67 intraday within a matter of like a couple of days. That was more than a 40% correction if you look at the intraday prices. And that was pretty fast and pretty severe. And I think it scared a lot of, newcomers out. Probably many of them never to return. So that I think achieved its goal. It kind of skimmed that froth off of the top. And so it became more realistic. These are prices that I think we still need to kind of digest because, I mean, it wasn't that long ago, maybe what was it, August, September, we were at half of these prices. So that's what, 8 months, 7, 8 months. So really, it's not too surprising we're back here, but I do think that we've seen the worst and we're likely to move sideways for a little while. And then maybe sort of next quarter, we might see things start to gradually move up again. But I do think we're in a new sort of volatility period, especially now that we've gotten this huge run up and correction. I spoke at the Metals Investor Forum and then I spoke at PDAC. One of the charts I had was really interesting. I thought anyways, it's a generic chart for bull markets. And it's how the asset price acts in a bull market from start to finish. And the first phase is the stealth phase where nobody except really this very, very smart money is paying any attention. And things kind of move sideways and very slowly, gradually upwards, very quiet. And so clearly stealth mode. And then it starts to really pick up, which is I think what we started to have maybe late 2024, early 2025. And then that trend, it started to move up a little more steeply. And then eventually you get this, piling in, which is what we got when it becomes more discovered. This is the awareness phase. The big money starts to move in and the hot money and FOMO starts to kick in. And then you get this really steep run up, which we got from, into late last year and into late January this year up to $120. And in that chart, you get this the author of the chart calls the first sell-off. You get this correction. Well, in his chart, it's pretty tame, and in our case, it was pretty wild. But still, I think that illustrates pretty much the same stage that we're in. So you get this crazy run up because everyone starts paying attention and starts to jump in, and then you get this crazy sell off that scares the weak hands out that really don't understand this market and don't realize that it has so much higher to go. Well, that sell off leads to what in the case of this author, what he calls a bear trap. So it's a bear trap because the ones who get out and see this big sell-off think, oh my God, this is over. Silver's never going back to $100 or $120 where it just recently peaked. And we're in a new bear market. And that's the trap. We're not in a bear market. It's just a correction to scare all the weak hands out. And it did a good job of it. And, I called my book, The Great Silver Bull. Well, it's a bucking bull that has bucked a lot of participants off. And frankly, now I think that, the really sort of tried and true and well-informed silver investors are not getting bucked off. They're holding tight and they're continuing for this next phase, which is the mania phase. I will say this, that chart that I used has First, the stealth phase, the awareness phase, which I believe we're at the beginning of, then the mania phase. I think that both the awareness phase and the mania phase are going to be a lot more drawn out than they are in the chart. I mean, I did use it because it's practical, and it does help to understand where we are. But yeah, I think it's going to play out quite differently than that. All that being said, it's not too late. So if anybody was wondering that, it is definitely not too late.
For the physical demand side, it's obviously pretty wild, especially the last few weeks. What are you thinking, I guess, throughout what we're going to see, maybe even into the summer with some of these silver delivery dates? I mean, we just saw the technical issues. I don't want to get into too many conspiracies for
Right.
silver investors, but there's obviously we're getting low. And I mean, what are you thinking that we're going to see, or how much of a catalyst will that be for silver prices, do you think?
I mean, I don't follow the futures market too closely. I do follow it to some extent because I get all this sort of updates and news feeds that come along and keep me informed about generally what's happening. What I can see is that that market is very tight. It really is the Shanghai that is the true physical market, because most of those contracts are delivered in kind, in physical silver. And so the COMEX and the LBMA are really much more paper heavy markets, and their pricing power is dwindling. We really see that Shanghai, India, for example, has decided that it's going to drop the LBMA pricing directive. They're going to use their own internal spot pricing mechanisms. So it's all shifting east. It's really not surprising that the physical market is becoming a lot more influential. And I think that the West is going to ultimately have to just follow along. It's not going to be realistic to kind of have these two price, dynamics going on long term. And a lot of the inventories are tight. They're staying low, and I think that it's very telling that deliveries are high in the West as well, keeping this deliverable silver inventories quite low. And frankly, we've had, like you said, in the last few months, we've had two instances of the COMEX saying, there's some sort of a technical glitch and we can't trade these futures. Obviously, lots of people wonder about that. I just think that we're going to get it. We could very well get to a point where someone big who holds a long contract is standing for delivery and ultimately says, I want my silver. And that exchange says, I'm sorry, we just don't have that much silver available to deliver to you. We'll have to, pay you out in cash instead. They'll say, no, I really want the physical silver, and they just don't have it available. And that is going to be a real, they say that, they ring the bell at the top or at the bottom, that doesn't happen. Well, that's going to be a bell that it's a starting gun for a lot more volatility, and probably a lot. You could see these huge gap ups if and when something like that happens. I think the odds are pretty decent for something like that to happen. But if that were today, for example, we're at $80, frankly, I wouldn't be surprised to see a $15 or $20 gap up in the silver price on that kind of news. It would just shock the market, and people would scramble. More than anyone, it would be the industrial consumers, because they don't have, it's not an optional thing for them. They need this silver. They're producing all kinds of things. And so it's very difficult to substitute. So yeah, I mean, this market I just think it's going to continue to get very interesting.
On the industrial demand side, obviously silver is so important for so many things. Solar is not going anywhere. It's only, in fact, becoming a bigger demand in that market. We've talked about it before on the podcast that because it's just such a small component for a lot of these tech, it doesn't even matter if it becomes a $400 silver price, because you can't replace it, and it's such a small cost to them for the pieces. Do you want to give some insight or any of the commentary that you have for stats coming out this year on the solar sector or tech and demand for silver, where we're at?
Yeah, sure. So there's some interesting things. I mean, two points I think are worth remembering. 5 years ago, industrial demand accounted for half of overall silver demand. It now accounts for two-thirds of overall silver demand. So that in itself is interesting and important, but the implication uh, is is even sort of more important, I think, which is that higher higher consumption of industrial demand or a higher proportion of silver, available silver going to industry means less silver available for investment demand. So we've gone from 3 years ago, the other half, let's say, of silver being available for, to put into ETFs or to put in to buy physical coins and bars. Now only a third of the silver supply is available for that. So last year, at the end of the year, when we saw the market become more aware of the silver market and the tightness, and then the prices starting to move up, and all these participants jumping in. Um, I think that's key, and that's part of it. That's to me the market realizing and rationalizing that there's only a third of the silver there was 5 years ago now available for investment. So when all of these participants jump in and want to have the physical silver for investment purposes, um, they put a big squeeze on it, and that's I think what happened when we went into the end of December and then ultimately to the end of January when it went to $121. Um, so that is unlikely to change because the Silver Institute thinks we're going to not only have similar demand levels proportionally here when they finally put their research out in next month and their forecasts. But they, a year ago, said that they expect silver deficits to continue for the next 5 years and that we would reach all-time high deficits at some point in the next 5 years. So that's one thing. If we drill down and we look more specifically at solar, I think this is really an interesting point. Really high silver prices are putting pressure on the solar industry to look at ways to deal with it because it's about, or even at about $40-50 silver was about 20% of the cost of a solar panel. But there are these sort of counter pressures. Batteries that are used along with solar to store solar energy, because of course solar panels produce energy during the day, but not at night. That's always sort of been the biggest sort of argument against solar. Well, battery cost is falling by about half over the next decade. And in 2025, there was about 60% of 2023 solar capacity installed. So the battery capacity to meet solar capacity, let's say one for one, is really catching up very quickly. There was some great research by a group out of Norway called Rystad Energy, and they see solar installations growing globally by about 3% a year, but they see battery for solar growing at about 12% a year for the next decade. So, takeaway about batteries for solar, it's that batteries are now making solar a base load energy, a source of base load energy. So, you had what was it, about a year or so ago, you had the Magnificent Seven saying, okay, we're building out all these data centers, and now AI is driving even more of that requirement. Well, a lot of utilities are telling them, we don't have the power that you need. So you're going to have to kind of manage to find this source of power on your own. I think it was Microsoft that was able to kind of lock up the unused power at 3 Mile Island in the US. Nuclear power is baseload, and it's fantastic because it's clean. And the thing is that nuclear takes 15 years from decision to execution and to be able to start drawing on that power. Solar takes a year and a half. That's 1/10 of the time. And it's pretty cheap, and it's the cheapest form of additional energy that a utility can add. So solar's not going anywhere. Batteries are making it base load. They're making it a lot more accessible. And we've seen that the tech companies that are looking for green energy sources have really taken up solar to the tune of 5 times more last year than they were nuclear. So it's great. I mean, if you've got the land, you can build out your own solar farm right next to your data center. You're completely independent of the utility. There's very low maintenance on this. I just think that even if silver, stays high and expensive, all the other tech applications, like you mentioned, Cali, are interesting because they use such small amounts. It's really not all that of an impact on the price of the final product, but it would have more impact on a solar panel because a lot of silver goes into them. So I just think that it's going to get rationalized somehow. Perhaps solar panels become subsidized. Um, Companies will just, I think, find ways to continue using them nonetheless. So, anyways, these are some of the big, I think, takeaways for the impact sort of on the industrial side and what to look for.
I think if anyone saw the solar farms in China, they would be buying silver. They're massive.
That's absolutely true. Yes, it's pretty phenomenal what they've been doing with this technology.
So I love, obviously, we've set up a great story for silver to switch gears into the miners now because a lot of them are still trading pretty undervalued, like that they're trading around the prices of $20, $30 silver. Some of them are making insane cash flow right now. The producers, obviously. What are you seeing after PDAC? Like, what's the sentiment out there for silver stocks?
You're right. Great points. I mean, the all-in sustaining cost for an ounce of silver on average, if you include byproducts, so which are typically gold, copper, lead, or zinc, is about $20 an ounce. So at $30 silver, they were making 33% profits. At $90 silver, they're making 78% profits. So their profits are up like 2.5 times. And I think that we're going to start to see over the next few quarters, as these miners report their profits, the market is going to have to come to terms with that and realize that their prices have not yet reflected, although they've moved quite a bit over the last year. The explorers, the developers, the producers have moved significantly. But there are some charts that show that the price of silver has moved up so much and so rapidly that the price earnings ratios in these stocks have not kept up. And so, although their share prices have moved up, their valuations have actually gone down. So they've gotten cheaper as their share prices have gone up simply because profits have gone up so much faster. So I think that's what we're going to start to see in the next few quarters. And I think that really actually is the opportunity over the next couple of years. It's moved from silver to silver miners. I'll give you a couple of examples. There's a scarcity premium for silver miners because there are so few. And if you look at how they are priced, so the price to net asset value for some of the, say, the four top names and gold producers is 1.3 times the net asset value. That's what they trade at. The the multiple for the top four silver producers is actually 2 times. So instead of 1.3 times, so nearly double, or 2.1 times, sorry. So nearly double what a gold miner gets. And that's, again, I believe because of the scarcity premium. There are so few. The money that comes to this market has less names to go into. So they just bid up what there is available. If you look at, and it's not me saying this, but I'm happy to repeat it, there's a guy who runs a fund, the $3 billion Jupiter Gold and Silver Fund. His name is Ned Naylor Leland. He's the fund manager. He pointed out recently that silver producers are trading at 2 times NAV, but the developers are still only trading at 0.2 times NAV. So to go in this market from developer to producer is a 10x. We haven't even talked about what the juniors can do, some with discoveries and small producers that are really getting a big kick from these much higher silver prices, and especially after they do some great work to control their costs and so on. I think we're going to start to see a lot more M&A as well. This is definitely a space to be watching very closely.
With silver prices the way they are, have you looked at a different like investment plan now that some projects that probably didn't make sense at $20, $30 silver, but say it's 80, 90, they make lots of sense. So have you changed some of your fundamentals of what you look for now? Or are you more open to different exploration stories as this silver price continues to rise?
Absolutely. I mean, we can rationalize a lot more easily lower grade projects because they're suddenly a lot more profitable. And then you can also rationalize projects that are open pittable, let's say only realistically, economically, versus being underground projects. Because again, yes, depending where, open pit can be more difficult to permit, but the costs are very low typically with open pit. So you can treat much lower grade ore. So yes, absolutely, Cali. These kinds of things are becoming more attractive. It does open the opportunity to invest in projects that prior were just sort of marginal. That's really changing pretty quickly.
I know Mexico is, old news a few weeks ago, but has
Right.
that changed again are you looking at different jurisdictions or like mainly focusing the US and Canada right now because of that? Or do you think that is a long-term play that, is a great dip to buy in the Mexico space? Or what are your
So,
thoughts?
I do think it is an opportunity, frankly. Mexico's not going anywhere in terms of silver supply. They're more than 20% of the global supply, which is just phenomenal, like more than twice as much as the next biggest producer. Regardless, there have been some really interesting changes where silver is in abundance. And so they're very positive changes. To some degree, you've got some changes in places like Ecuador. You've got some clearly positive changes in Argentina. You've got also clearly positive changes in Bolivia and in Chile. And as soon as I saw that there was a swing to the right in Bolivia, I became bullish on Bolivia, although I did have a couple of companies that had already been operating there for several years. So those were already in the portfolio. There was one that I was looking to add that was a higher risk exploration play and that it was pre-discovery and that's done really well. And as soon as I saw that the administration had changed, and swung right, I went ahead and recommended that, and that's done really well. So there's a lot of buzz, actually. I'm going to say probably more than anywhere for Bolivia, if you look at South America. And just quickly, Callie, if it's not hard if I've followed this closely enough for long enough, and that is that if you look at where can you find silver, well, there's not that many places. If you look at a map, there's a bit in Europe, and a lot of these are polymetallic deposits, so they're really not sort of pure silver investments. You have Morocco. Other than that, you have the Americas. And if you look at a map of the Americas, it's almost exclusively along the western coast of the Americas. It's along the Rockies and the Andes and up into the Yukon. There's not that much in the east. It's pretty rare. You have some to some extent in Australia, but it's all along the west. And so that's where you find it. You find it, as I say, in Idaho, in Nevada, Arizona, California. And then if you go, then of course Mexico. And then Mexico, it's going to be again mostly in the west. After that, if you go further south, you've got Ecuador, Colombia, you've got Chile, and you've got Bolivia. So these are the places where the silver is, and that's where we need to look. And thankfully, most of or a lot of, I'm going to say, the geopolitical risk in these places seems to be fading. So it's a good time, actually. It's a promising time to invest in silver opportunities in those places because a lot of that risk seems to be going away.
We've talked about the traditional 60/40 portfolio hasn't worked for a while. I'd love to know, I'd love to know how your portfolio has been doing in the silver space for the last year, especially for new investors that are looking at getting into silver. Some of the returns have been insane.
Well, you're right. In fact, last summer I hired a young guy who's very smart, very mature, really understands this space. His name is Ted Butler, and he's now a senior analyst with us, and he handles most of the research and writing for one of our two silver newsletters. And interestingly enough, the 60 portfolio was part of, he spoke at Metals Investor Forum and at PDAC. And interestingly enough, that was his focus, was the 60/40 portfolio, which I won't go into all of the details, but he really started paying attention to about 4 years ago almost, and saw that it was broken. I mean, 2022, just less than 4 years ago now, mid 2022, the 60/40 portfolio had its worst. It had its worst year in, I think, something like 90 years. It was just an absolute mess. It was, I think, down something like 17 or 19%. That is, if you ask, mainstream, that's not supposed to happen. Bonds are supposed to, zig when stocks zag, and that didn't happen. Just having maybe 10 or 15% allocation to gold and silver since then would have absolutely saved a portfolio. So, his talk was the illusion of diversification. And I've got to say that, you can be diversified in different ways. People ask me, how do I diversify? And I tell them it's the barbell strategy. You can adjust. So you can adjust your risk very easily, any way. That's how I feel comfortable. And I believe that's probably the way to be diversified for probably the next 10 years. Commodities are really, really, really historically cheap. So we've seen precious metals move already. I think we've now started to see the energy sector move with oil, with nuclear. And I think that we're going to see the base metals start to move, and we're going to see agriculture start to move. But you asked me, Cali, about how the portfolio had performed. It was our best year last year by far. We had about 30 positions in the portfolio. Most of them doubled. Many of them were up 5 times, and we even had some that were one of them was actually up 8 times in 2025. So most of that has continued this year. I'd caution people not to expect the kinds of returns that happened last year. That was an outlier. But that said, I do think that we're in an ongoing, very positive environment for silver stocks. The opportunity was silver for the last couple of years. The opportunity ahead is the silver stocks because their profits have not been priced in yet, and I think that's coming.
What are a couple of your favorite silver stocks that you've seen for the start of 2026?
If you look at what's out there in different categories, I really like Santacruz Silver. This is mostly a Bolivia play. They have one mine in Mexico. They're actually bringing a fifth source of revenue. One of their sources of revenue is where they have processing facilities, and they actually buy ore from artisanal miners. The other four are mines. Of the other four, one of them is going to likely be online later this year. They are the largest underground mining company in Bolivia. They are very significant to the country's economy. They've been operating there for years. Very, very well run company. I like that one a lot. Skeena Resources, which actually presented at the Metals Investor Forum. This is now fully permitted project in BC. They really have to just build out over the next year, finish construction, and then start producing. This is going to be an open pit project, which is really world class. I mean, there are so few like this, and really high grade too for open pit. In fact, they're going to be producing, it's more gold than silver. However, just the silver is close to 10 million ounces a year, which would be 1% of the global annual silver supply. So that is really one that is, I'm going to say, very notable. You've got companies like AbraSilver, which in the range of about 300 million ounces of silver equivalent. In Argentina, they recently got approval for an investment plan that was issued by the government of Argentina, which makes operating the mine in Argentina a lot more favorable. They remove foreign exchange restrictions. They lower their royalties, their taxes, etc. So that's become suddenly very interesting. You've got a company operating in Peru, Cerro de Pasco, recently had some really interesting news that they're going to get support from the Department of Defense in the US because they have strategic minerals in addition to silver. This is one of, if not the world's largest above ground mineral inventories. And so their cost to mine, because this ore is above ground, is going to be very, very low. So this should be a really profitable operation. And like I say, they've gotten some clear support from the Department of Defense. I think it's to the tune of about $5 million. And this opens the door to them potentially getting a loan as they move towards going into production of as much as $300 million, again, from the US, which would be interesting because it would be non-dilutive to shareholders and probably at very favorable rates. So there's no guarantees, but some really interesting projects and companies for your viewers to look at.
Peter, I won't keep you all day. You've been a wealth of information, but for close, what would you tell investors and following to pay attention to? I guess, like, what are some of the key catalysts that you're really going to keep your eye on for the next few months as we go into the summer and spring?
Yeah, so I mean, I think watch for volatility. I do think that the silver price is going to get sort of kicked around more, up and down than it has up until the last, say, few months or so, the last couple of quarters. But use that volatility to your advantage. If you're not involved that much, or if you're not involved at all yet, watch it closely and use dips to buy as much for the silver itself as for the silver miners. Again, I think I did what I could to make the case that, and for the reasons why, that the miners are extremely cheap still. The next few quarters and the next couple of years should be really good as the market comes to terms with, starting to really price in these phenomenal profits. All we need is for silver to move sideways at $80 or $90 for a couple of years, and these companies should really re-rate to much, much higher levels. So you don't need to have silver go from, say, $80 right now or to $100 or $120. If these miners can keep mining, I remember one miner telling me about 2 years ago, he said, Peter, if we could just get the silver price above $30, we'd be so happy. And here we are at, above $80. So they should be really happy. And I think their shareholders will be really happy. So again, use that volatility to your advantage. Get involved. I think that it's not only not too late, but I think it's crucial to have exposure to this sector.